Well, hello folks, I'm L.A. Little and this is your daily NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective, asking ourselves just one question: what happened today? What does it tell us about the coming days? I do this show 4 times a week, every Monday through Thursday. I broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. And when we look at these markets and we ask ourselves what happened today, right, we take a look at what the price change was, what the relationships were, things of that nature, and try to make sense of it, and then look inside those numbers and see if there's some sort of a key significant area being attacked and either being overtaken, right, or being rejected. And being able to do that is, what you're looking for. And this particular week, we haven't been able to get a good read on what this market wants to do. And last night I suggested to you that what really is happening here is that this market can't fall because of the rest of the world. And today was no different, slightly higher again. It pushes up again. I shouldn't say slightly. I mean, you had a 0.5% gain. So it wasn't a bad day. Market up decent. That came despite some softness in the Russell early on, and then the Russell kind of bounced back. And actually that number doesn't look right on the Russell. We'll get the actual reading here. For some reason the Russell seldom comes out right here, or a lot of times is wrong. Elsewhere, bonds sell off again, dollar soars again, right? Those were the two big things today. Elsewhere, most of the commodities, as the dollar goes up, most of the commodities are typically going to sell down. And in general, it's not going to help the equities unless that dollar is in some sort of a range, and that's where it is now. Because it's like anything else, you get used to it until you either get outside of that range and you start skying higher, or maybe you start to fall. That becomes normal, right? It's just like oil prices. They've already dropped half, but now that they're there, it's normal, right? People kind of don't get shocked by it anymore, unless it starts to precipitously drop again. So again, it's not so much that the dollar soared 1% today, it's still inside the range. And until it gets outside of that again, then everybody thinks, oh, okay, it's just bounced around up here, and we're quote unquote used to it. So let's take a close look here inside the markets, look at what these things look like. So starting with a benchmark index here, the S&P 500. Now, I talked about this last night. There's kind of a little small ABCD structure here, and it more or less kind of fulfilled it today, so it's almost there. It kind of reaches up. It's not quite there, but it kind of reaches up to this breakdown bar's high. And as we look across these indexes, we're going to see that that's the key level in every one of them, and we're going to see that on the Russell in particular today. On the S&P, it's 2097. We closed the day up 920.91, so we're 6 points away, right? That's the target. Look at where you're at on the calendar. All the earnings are going to start hitting next week, and quote unquote the best ones hit the next week and a half. In other words, the ones that typically lead off the earnings season, at least for the last 3-4 years now, they have been the prior, the ones that have done the best in general. And so that's the setup. Does anybody want to leave the market in front of that? No. And if they did want to leave it, they can't, because the rest of the world is soaring on central bank intervention. So you've got central bank intervention, you have the quote-unquote happy talk here that the Fed's not going to raise rates, and I suspect the Fed is going to have a hard time raising rates. Although I'm starting to think that they are determined to raise them maybe as early as June or potentially September, because they feel like they have to put this market on notice, and all the happy talk isn't doing it. So I wouldn't be surprised to see them raise the rate one time just to shock the market a little bit into accepting the fact that the Fed's going to quote unquote normalize things, even though I think the Fed's going to have an extremely hard time doing any kind of series of rate hikes, because I think the dollar's going to soar if they do it. And so if I look at the S&P 500 here, it's still thrash and trash, right? It's up and down type stuff. You know, you've had these moves up, back down, back up, back down, back up, back down, back up, right? Over and over and over. And I suspect we're still range bound. If we pull over the weekly chart, you know, this is a range. You got one here, you got another one up underneath it, you had the one prior to that, and the one prior to that one as well. So you got all these ranges, and what you're starting to see is depending on how you want to draw them, and matter of fact, if I were to draw them probably more accurately, it would be something more like this. That would be a more accurate drawing of those ranges. And what I want you to recognize is, and I pointed this out before, is that this range is a lot bigger than this range, which is a lot bigger than that range. Why is that significant? Well, because it's saying, you know, the break, when it comes, it's going to be bigger, and the fact that they're getting smaller makes me think it's going to break to the downside. And what concerns me is that these are all lined up, right? You got all your swing points lined up at particular places. That's never a good thing, you know, because if they start to break these things, you can get some serious momentum to the downside. You got daily swing points here, you're going to have daily and weeklies down here, and you're going to have weeklies and monthlies down at this level. So if this market does take a spill, you know, it has the potential to be an ugly one. So that's the backdrop coming into earnings season. Have we taken a spill? No. Why? Because the rest of the world won't let us, right? Basically, that's what it is. We're not up there on our own. We're up there because of them, right? That's why we're up here at these levels. That's why we're hanging at these levels, in my opinion. You know, I've come to realize that's really what is going on here. And this market is trading off the rest of the markets, not off its own. And it's just gyrating as a result of it, because there's not any good drivers here domestically right now. Let's look at the other indexes right quick. The Nasdaq. Now the Nasdaq's coming up to hit its breakdown bars high, 5,006. We're at what are we, 20, 30 points away. So Nasdaq wants to try to crawl up there to do the same. If we look at the NDX, same thing, 44.42. We're trading at 4403. So that one's about 40 away. That one's going to have a harder time getting up there because the Apple is such a big part of that particular index. And here's the one I wanted to focus on tonight, the Russell. So the Russell high, and this is the one that's been trying to get up there first and give us a signal. 1265.85. We did 352 there. We're doing 317 coming into it. We miss it by 7 cents. And you see that wide price spread today off of that. Well, what I wanted to show you was what that looked like inside the day. And here's an inside day look at the Russell. And look what it did. Right off the bat, the Russell went for the highs. It just missed it. I mean, it was only, what, 7 cents away, and it did it all within the first 20 minutes, it looks like. 10 minutes, actually. First 10 minutes. And then what did it do? It started to sell off and just gyrate to the downside. What does that tell you? As new highs, right, critical point, as we get to the critical point, what do the buyers and the sellers do? They back away. They don't want to buy at quote-unquote higher price. They want to sell at the higher price. This thing rapidly dropped from 1265 to 1248. So it dropped 17 points, ends up, you know, actually, and here's the real number, ends up negative on the day, 0.29. And so you got a negative day on the Russell, whereas everything else was up. And why is that? Because the Russell's already at that critical point. What does that keep telling us? Buyers are not up there at new highs, folks. Yeah, we can crawl up to those key levels, but when they get there, there's no reason to keep buying. And that, if you're trying to read the market, it's telling you it's going to be hard to get up and over this and keep going. Can it do it? Sure, anything can happen, right? There can be something that comes out. Let's say we get earnings next week and those earnings are great, and that becomes the catalyst to start moving us higher. Sure, it's possible, but right now they're not there, and they're not going to be there until some catalyst shows up. And the concern, if you think about it, is Europe's already made a big run. Now you can argue that Europe has consolidated and potentially is making another leg up now, and we'll look at that. Actually we can look at that now as we're going. You could make that argument, especially in France, not so much in and here's the French market, not so much in Germany yet. So the French market, there was a consolidation period here, right? And now it's starting to break out again. So you can make that argument here on the French market, but when I look at the DAX, which to me is the driver in the European market, that's not the case. It's still in the range, right? It hasn't broken out. If the DAX starts to break out, then you can say, hey, like the consolidation back here, leg up, right? Consolidation here, another leg up. If that starts to break out, well, I can go on that boat and say, yeah, that's happening. I'm not going to believe the French market, though. So that, it is an indicator. It's an important market, but you've only got one. You've got divergence. I want to see both of them do it if they're going to do it. So if this market is still consolidating, and then if we walk over and look at Hong Kong, and we already know China's gone crazy to the top side. If we look at Hong Kong, you made a huge move up last night and then sold off. Volume, even though it doesn't show on this chart, was even heavier. They are going to open up tonight. Probably they're going to trade inside this bar. I would expect if that volume is even heavier tonight, I think you got some sort of a blow off top here, short term, because we're on the short term time frame, and that would indicate to me that a lot of that stuff that's holding the domestic markets up is going to be going astray, and we're going to actually see something else take place. So again, coming into earnings season, I don't see the catalyst. I don't see the rest of the world pushing us that much higher. I see the dollar rising, and we'll talk about that when we come back. And we'll look at some of the earnings again, the early ones that we can look at to give us some sort of an indication as to how earnings season so far is going. I'll be right back.
If you are serious about trading, TA Today's Tools is the perfect service to help you reach your trading goals. Go to our homepage and click Use Our Tools. Here you will find an overview of this amazing service we offer to our clients. One of the tools you will have access to is the TA Today charts. These charts visually map all the neoclassical concepts that LA writes and teaches about, and is the perfect charting service for neoclassical traders. Learn the trend of a stock you're interested in and see this stock on all 3 time frames. To get started with a free 2-week trial, go to our homepage, click Use Our Tools, and then click the free trial button.
So as we come back here, I want to talk about the dollar and look at it again. Big volume today, right? Spikes back up. It was up over 1% today, just slightly over 1%. This dollar is going to try to come back to its breakdown bar, and that bar was 26.30 on the dollar. And if I pull over the weekly, you can see that this thing simply did a little small pullback inside this large move up. There was really kind of 2 ranges here. It got into the lower half, and then now it's back in the upper half. It's going to try to test this area. I would expect it does it fairly soon. And if this dollar starts to break out, folks, it's going to be an issue, because I guarantee you, you're going to hear the dollar excuse over and over and over in the earnings calls. The other issue, which is the one that's most concerning in my opinion, is that most of the slack in these earnings models has been used up. In other words, in the first quarter, it's actually the last 2 quarters, the dollar's been going up. I mean, look back when the dollar broke out. It was July. So when was that felt? Well, to some extent, it was felt in the October numbers because there was a pretty good move here. But there's not enough, and the financial, the chief financial officers, they're always going to keep some slack in the books so that they can move things around, right? And they're going to keep it on the positive side so they can take up any kind of negativity that happens to hit the books. And so that first earnings, that was that way, right? Then you get another big move into the end of the first quarter here, and they did the same thing again, although they couldn't cover it, and you started hearing people gripe about the dollar and then use the dollar as an excuse on earnings calls. Well, what's happened since? Well, it hasn't gone as much, but it's definitely gone up again. And I'm sure you're going to hear more and more talk about earnings being affected by the dollar. And if this dollar starts to break out, I can guarantee you they're going to start writing down the next quarter's earnings as a result of it. So the dollar, be it as it may, whether it really is the reason, it's an excuse. And it's an allowance for companies to say, oh, it's not our fault. Right? If that dollar wasn't so high, we would be doing better. It's like a kid giving you excuses as to why, he tore his blue jeans on the way to school. There's 20,000 excuses of why it happened. When the real reason is he was just clumsy and he fell. So it's the same sort of thing, folks. It's an excuse. And it's a reason that people can point to and say, it really wasn't that we didn't execute, it just happened that way. Other thing that we saw today was the bonds. Bonds fell, they're back down at the swing point low. Now the bonds, in my opinion, had been holding pretty well. Today was kind of an ugly day, not a lot of volume. Swing point low is right down here. I really, if I'm bullish bonds, I don't want to see it break this swing point low because you do have a high volume low sitting down here when it looked like bonds were going to break down. So tomorrow, kind of an important day. It's Friday. We'll see if the bonds want to move or not. Another thing that typically moves big on Fridays is gold. We'll see how that dollar behaves tomorrow because that was pushing gold down again today. But gold actually did pretty well. The bottom of this bar it was coming into, which has 7.2 million on it, was 114.54. You got to 114.85, so you almost, 114.48, so you got into that bar, closed slightly over it, right? So that's like a test into the bar's low, and you hold. So it's kind of a positive, and if I look at the GDX, inside this, GDX comes back into this big bar on the way up. That was 1888. It gets into 1877, closes over it, absolutely no volume on this retrace. This is going to try to set up another ABCD structure to go back to the top side. So for whatever reason, gold looks like it's going to try to pop back up. And if it does, you then potentially have the nested ABCD structures that can take it quite a bit higher. So we'll see how gold plays out, but it's kind of a curious setup coming into Friday on gold, looking kind of interesting to me. I think that's the major things. I didn't pay a lot of attention today. I've kind of been under the weather, so I kind of took most of the morning off. Let's quickly look and see. I saw some news on Altera, so IBB again coming back up, and that was Altera was saying we're not going to let Intel take us over. So the stock's got a nice push out of this, and it looks like it is going to try to get up there and test as well. Let me see what Altera stock looks like. So you had that big push up last week, and this one was fading off, and then they just, even though they came out and said we're not going to take the Intel bid, they bid them up anyway, expecting them to do that. Let me see how Intel traded off of it. Really doing nothing. Intel's in trouble, and they're looking for a way out. What's the best way? Well, if you can't grow, you buy somebody. And that's what all this M&A is. You keep seeing M&A everywhere. Why is that? Do they think they're quote unquote that cheap? No. They're looking for a synergy. They're looking for a way to boost their stock because they can't boost it their own. They can't grow their sales. It's the problem everywhere. It's the universal problem with these companies here domestically and elsewhere as well. As we come back, we'll do a viewer question and do the final thoughts where we'll both look at do some sort of a pre-earnings look at those that have reported so far this month to give us a feel for how earnings season is going and therefore how it may go. We'll take our best shot at what that looks like. We'll be right back. So as we come back here, the viewer question has to do with Rite Aid. Rite Aid actually reported earnings and had a pretty good earnings report, but they came out and they sold them. So what does it tell you when you come out and you see a good report getting sold? Well, it's already priced in, right? Expectation's already there. Now, the good thing, if I'm looking on the daily chart, the good thing is this is coming back in to this swing point high. It already done a test once. It's coming back in the next time now. Volume still doesn't look that bad comparatively. So Rite Aid may in fact hold. It could trade all the way down into this area, which would be the bottom, you know, this kind of zone here, this area in here. So, you know, I don't know if it's going to hold here or fade back. I don't think this is a disaster report, but it doesn't look like there's a lot of upside. If I go look at the weekly, it did break over it, but it looks like it's going to give it right back to a weekly retest regen. That low on the weekly, 732, since it's coming back immediately, it could come all the way back to there. 732 is almost back into this low, 767. You know, so Rite Aid to me, I don't see a huge upside. If I were going to trade it, I'd put a tight stop if I tried to buy it here, and more than likely I'd see how it trades tomorrow before I do anything, because I think you're going to get a buy even lower, back in that 760 to 730 range probably. It's a consolidation stock probably at this point. Let's come back and look at the rest of those earnings and think about, you know, where do we go from here for the remainder of the week, which actually is tomorrow, and then earnings really get going next week. As we come back here and give our final thoughts, you know, with earnings season come on, this is really the next catalyst. And if you look at, you know, if this is a fact sheet from FactSet, key metrics talking about earnings growth, 4.6% decline projected on the S&P 500 for this quarter one, and it's going to be a tough one, and everybody knows it, right? So the earning guidance, right? 16 companies that have issued positive, 85 negative. You know it's going to be a tough one. So it's already factored in that it's going to be a tough earnings season. Question is how does the market deal with it? Have they already priced it in? Is it going to be worse than expected? And in general, are the company's going to say, okay, we just missed the boat? And a lot of times when they do that, is like they say, okay, I've got to build up my you know, finances again and get a little slop back in my balance sheets. So I might as well just, you know, blow it out and say, okay, it was terrible because of $1. So rather than just miss by, you know, or just miss by a penny, I'll just miss by 2 cents. And I'll build up some, you know, slack for the next time around in case I need it. And a lot of times that's what happens. When it happens in mass, you get a serious decline because everybody gets freaked out. And so that's going to be the issue this quarter. Are we going to see in mass misses? And that guidance, is it going to be tough? And if you see that, this market's going to get clocked probably. And that's going to be the question next week. Let's take a look at some of these companies that have reported already and see what they look like. So one we talked about last night, Apogee, this is building materials. These guys, you know, got a good earnings report. They skied, right? That's a nice big win. Looks good on each of the time frames. Really nothing wrong with this chart. They're in a sector that's doing well. They did well. They got rewarded. Another sector that's doing pretty well is anything with business services. Global payments had a nice big spike up on earnings as well. So that looks pretty good. So those are the biggest positives that I've seen. One other one, Sigma, it's doing okay. I mean, it had earnings here, gyrated quite a bit, but held up. That's semiconductors, specialized semiconductors. If we go to things that have been negative, we talked about building materials. Alcoa last night got hit today. Wasn't horrible. Volume expanded. This one's going to try to test the lows. If we look over in retail land, Bed Bath & Beyond, I talked about how this one was going to get hit and has been hit, on a continual basis now on all the earnings calls, and they keep pushing it back to the highs. This one's going to come right back down here and go all the way back down again. If I look at another group of retailers that have done really well, Family Dollar, discount retailers, Family Dollar couldn't hold the highs. Got up there, got over, gave it all up. That looks to me like, just like we were talking about with RAD, that looks like it's topped out. It's probably going to trade sideways at best. One tonight, Aerospace, GenCorp, these guys, looks like they're going to trade, it looks like kind of flat. So anything with defense still doing okay. And let me see what else is coming out so far. Oh, Progress Software. This is an application software. They got hit. Not doing so well. Another software company I saw did the same. I can't seem to find it. Here's another discount store going to get hit tomorrow, PriceSmart. They look like they're down maybe 3-4% tomorrow. Restaurants. This is Ruby Tuesday. Looks like it got hit pretty well today, not going anywhere. Another app. Here's that other application software, SeaChange. Really got hammered on earnings. And the last one is one we looked at last night was WDFC. Got hammered today. Specialty chemicals. When I look at most of these, it's not like they expected all these companies to do great. What do I see? I see most of them not really doing anything on earnings. At best going sideways. For example, if I look at some of the sideways Micron, this one had already sold off a decent amount. If I look at it on a weekly, a decent amount, just kind of held, couldn't do anything. Another one, Monsanto, really didn't go anywhere, and that was just hanging at the tops. So in general, so far, and it's a sparse sample, and it's not the major companies, but so far, earnings not being treated that well coming into the earnings season. Next week, we'll find out. And that's going to be the key to where this market goes next. As I've been saying, market is in a dangerous setup here. And the dangerous setup is that you've really got a lot of swing point lows land right up underneath where this market is. And in other words, I mean, it doesn't have to go down here and break them. But if those earnings reports do not propel this market higher and we start breaking out, and I don't want to exaggerate here, there are swing point highs at the highs. If we get over them, this market can push again. That is a risk if you're going to short this market, and I wouldn't suggest you short it. The trends are still up. All I'm saying is if this market starts to give it up, you got swing point lows here that if they break, you've got swing point lows down here that if they break, and down lower there are more. This is your daily time frames, your weeklies, and your monthlies. Folks, if this starts to cascade, it can go quick. That's the setup. That's where we're at. That's the risk in the market at this particular point in time. I think it's going to have a hard time, even if you got bad earnings, unless they're horrible. Unless we get a lot of companies coming out and just kind of throwing their hands up. I think it's going to be hard to break these lows down here, but I certainly think these can be broken. Thanks for listening. Have yourself a great Friday. Make some money. I'll be back on Sunday. We'll do the weekly show, and we'll take it from there and prep for what will be a big week in these markets. Have yourself a great night. Take care, folks. Good night.